All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. This is going to be a video declaring the number one secret that nobody told you about. This is going to be a little bit further explanation on financial planning fees and the importance of understanding in its entirety the effect of a 1% fee over your money over the course of the lifetime. Now, the best thing to take out of this video is to understand the impact of 1%. Understanding that your rate of return, the greater that it is, the more the impact will be. And the more money you have invested that is subject to that fee is going to really make its impact known over time. That's the whole point of this video, is to understand what the impact over the long term of a 1% fee over your money charged over the course of your lifetime will render. Guys, I kick you into the exercise. So this is the greatest investing secret that nobody's ever told you. There's no doubt about it. I usually start this exercise with $1,000 of starting capital, 40 years of an investment time horizon, $500 a month, and just an anticipated rate of return conservatively at 7% here. 0.03 is going to be representative of the total stock market index. A VTI is usually the product that I use there. This 0.03 is in line with the expense ratio over that account. What I'm going to try to drive home here is the impact of 1% over the course of an investor's lifetime. And a lot of people will underestimate the impact and not understand really what the impact of this 1%. I think way too many focus in on the 1 and they don't focus in on the percentage here. 2% I'll just include in the example. Financial planning fees run from usually 1% on the low end to 3% on the high end. And just to make sure that we're getting a good representation of the range here of investment fees from 0.03 on the ETF and then 2% here on the high end, just for example's sake. So if we go in here and we view the report, we can actually see here, this is something that without channels like myself providing transparency on, there's going to be thousands and thousands of investors that fall victim to this each and every year. And for those that have already fallen victim to it, it's really hard to get to those people because they don't want to admit that they've made a mistake. I'm one of those that were victim to this, and I have evolved in my thinking and understanding this very fact about investing, because as much as the financial planning institutions will have you believe that the impact of this 1% fee can be made up in way of support or outpacing the market, neither one of which really exist nowadays, because with just a little bit of discipline, you can absolutely overcome the effects of emotional reaction on volatility in the stock market with just a little bit of preliminary education, a little bit of coaching and encouragement from folks like myself who tell you that you can do it. You don't need to pay this 1% fee, but what they'll do is they'll really drive down on the value that's provided by this 1% fee compared to this 0.03, which is indicative of the passive income investor strategy. Now, the passive program here, you will pay the 0.03 over time, rendering 6.97, coming out to 1.25 million. Okay, so $1.25 million right here. There it is, bottom line. And you think, okay, well, what is the effect of the 1%? 1% here, and remember, this is going to be something that's downplayed in the investing community. I see this justified and rationalized 6 ways to Sunday, and the fact of the matter is, and all financial planners understand this, they all know it, and it's something that they do not want you to know. That's why I consider it one of the greatest secrets not disclosed to individual investors in the investing world. And the bottom line here is this makes a difference between a 6-figure portfolio and a 7-figure portfolio. The difference between this $1.25 million and this $968,000 is $270,000, over $250,000 of actual saved income just by nature of this 1% fee. This 1% fee makes all the difference in $270,000. So good luck to me trying to convince me that services rendered may at the onset appear to be justified because it's only 1%. It's only 1%, and I will be there in your greatest time of need to support you and coach you from making a life-changing, detrimental decision to your portfolio. No. That 1% to me is actually $270,000 of lost investment potential to the investor just by nature of choosing to be a passive investor that's going to render you a nice conservative 7% rate of return, as opposed to opting into this because you have grossly underestimated the effective fees and trusted the explanation that you've received that has justified this 1% fee over your portfolio, as opposed to focusing in on the facts. And make no mistake about it, this is the bottom line. This is the total at the end of the investment time horizon. This is the bottom line. This is what they do not want you to know. And this is why it is not explained in this manner with a more of an amortized type of explanation, as opposed to just always focusing in on the 1, 1, 1, 1, 1. Because to the untrained eye, that 1 appears to be not very impactful. But to the educated eye, you can see here how the bottom line makes all the difference. Guys, I'll kick you back to YouTube to conclude the video. Guys, welcome back. Out of the explanation here, I hope you understood the impact of the 1% fee over your money. It's super, super important that you understand this. I think a lot of financial planners will strategically focus on the 1%, 1%, 1%, and they won't explain it in the way that I explain it, in that the real dollar impact is what really is the eye-opener. And for all you guys that are looking to explore your options in investing, it helps to have an understanding of all of your options and what the implication of those choices that you have mean for your money. Guys, if you're new to the channel, you want to make sure and hit the subscribe button for me, hit the notification bell, leave your comments at the end of this video. Certainly we'll strike up a discussion with regard to the very root of why I put out the Independent Investor channel. This is meant to empower investors to understand the importance of self-directed investing and the importance of preserving your capital over the long term. Guys, thank you so much for tuning into the video, and good luck in your investment future.